Righty.
Now we should be good.
Yes, sir. Right on the money now. Okay. So I'm going to go for the sake of time, everybody's time. I'm going to get started. I'm going to get everybody added in here as they pile in. So today, guys, we got a great conversation with my guy, Lukas. We're going to be going over insurance, right? You know, I'm sure, you know, we just talked about Ron being in the game for so long. You know, Ron can probably attest maybe a deal or two that's maybe been blown up because of insurance issues, whether it been flood insurance, whether it been insurance premiums too high, or threw off the debt to income ratio, you know, just so many different things that go into insurance that actually has an impact on the transaction itself. And, you know, Lukas is going to be going over today, you know, some of the things that we really need to be paying attention to when we're looking at insurance and we're helping our clients, because it's taking, you know, just a transaction and turning it into a true concierge service. Because even though the transaction may be done, that insurance persists as long as they own that property, right, guys? So today we got Lukas. He's coming. He might be here in Fayetteville today, but I think he's coming out of Charlotte. You know, usually that's where he's working at. He's been in the game for a very long time. I'm not going to tell his whole story, but Lukas, tell us how long you've been in the business. Sure. And primarily what you specialize in when you're talking about insurance.
Yep. So I've been doing this now. I round up to 10 years because it sounds cooler, but it's right around 8 years. Like Caleb mentioned, which I appreciate the introduction. I'm out of Charlotte, North Carolina, was originally from Fayetteville, spent some time in Charlotte and really got my business kicked off in Charlotte. I do come from a family of realtors right here in Fayetteville. I consider myself a black sheep of the group because I'm the only one that didn't go into real estate. So my brother, he's a realtor here in the area. And then I've got two younger brothers, which I'll go ahead and move forward here so you guys can kind of get an idea of who I'm talking about. I think they're on this next slide. Yep. So you guys can see the entire screen, right? This little box isn't in your way.
Yeah.
You can see my dog. Okay. So yeah. So I've got two younger brothers right here, Zach and Logan. They're not quite sure what they want to do yet, but potentially looking, you know, to come into the business as well at some point. Like I said, I've been in the business now about 8 years, with 2 of those being in the asset management world. So I spent some time as a chief operations officer for a money manager in Charlotte. Started in the insurance business, transitioned over that, realized I really didn't like people calling me about their 401ks all the time. Operations is awesome. I think it's super important. I learned a lot, but I'm more of a sales guy. So I moved back to Fayetteville. I'm actually in the Southern Pines, Aberdeen, Pinehurst area for any of my golfers. That's where I live, but I've got an office here in Fayetteville. And then like Caleb mentioned, I do some work in Charlotte still too. I've got a German Shepherd named Wolfgang. He's going to be pictured right here in the bottom. And then I've got 2 cats named Deborah and Phoebe. Not much of a cat person, but they came with the girlfriend, so I really didn't have too much of an option there. Hobbies include basketball, working out. Been slacking in that category, so trying to pick that back up. Spending time with my dog. He's my best friend. He's been through life with me these past loaded 6 years. And then being outdoors and golfing is something that I enjoy as well. Rather large family. Like I said, 3 brothers, 2 sisters, ranging from 13 to 44. Dad got started a little early. Mother and brother are both realtors. That's my brother right here in the white. That's his wife. Brielle, my girlfriend, she didn't really make the picture. This was the best one out of the ones we took. And unfortunately, you know, she kind of got cut off here. Mom, stepfather, and then my 2 younger brothers right here. My older sisters aren't in the picture. They're down in Florida. So just didn't put them on here. And like Caleb mentioned, while we're going through this, if you guys have any questions, we can make this as interactive as possible. Definitely feel free to jump in. This is, you know, educational for you guys. So if you have any questions at all, you guys just feel free to jump right on in. Moving forward, we'll get right on into it. Let's see. So I am a broker. So I am not like a State Farm or Farm Bureau or any of those companies. Those are what we call captive carriers, and they only sell you their products. I contract with about 40 to 50 carriers, giving me the ability to find your clients what they need and then what they want as well from a pricing perspective, quality of coverage, quality of carrier, etc. And all of those are housed under Insurance Service Center, which is the broker that I work for. I do need to update this. This October will mark 50 years. This is actually last October. So we celebrated our 50-year anniversary. John Kennedy is the president of that company. He has done a phenomenal job building that company. We've got products include all things insurance with the exception of health insurance. I'm licensed in it, but I really it's a beast of its own. So I kind of stay away from it. My main game is going to be your home, auto, your umbrella, all personal lines. I do life as well. That's the one that I started in up in Charlotte, but coming from a family of realtors and just, I was that kid that everybody knew who mom was growing up. So naturally, realtors, lenders is who I work with most, making sure you guys are getting to the closing table, finding your clients the best product. And like Caleb mentioned, again, that DTI, which we'll jump into, making sure that any DTI issues are handled. Manny, one of Caleb's agents, actually just called me. He's got a closing. I'm not sure what happened, but they need my help. So he's trying to close as soon as possible, as in today. So getting them clear to close. Once I jump up the call with you guys here, I'll call his client, make sure we getting him to the closing table so that we can all get paid. 9 different locations across North Carolina, potentially a 10th in Charlotte. The office has been pushing me since I know the ropes out there to open up a branch out there. I'm still pondering it, but might be something that I look into. We insure over 20,000 homes, 15,000 businesses, and roughly 30,000 automobiles. So we are one of, if not the largest brokerages in North Carolina with those 9 offices and the client database of over probably 100,000 plus names, 200,000 plus names. It's rather large, but 20,000 homes, 15,000 business, and roughly 30,000 automobiles. A lot of our carriers, we are actually, as in Lidditz Mutual would be one of them, we are actually their number 1 broker in the entire nation. So huge client database, been doing it a really long time. Licensed in numerous states along the East Coast. I'm licensed in South Carolina, Virginia, Tennessee, and Georgia. I think I've got a couple of other ones that I really don't do too much business in, but nonetheless, my office is licensed in a majority of those states up and down the East Coast. So if I can't run it under me, I'll just run it through somebody else in my office. And then contracted, like I mentioned, with roughly 50 plus carriers. And again, we are a top producer, definitely in our territory. So as far as referral relationships, lenders, realtors, and investors, that one's highlighted there in bold because those are who I work with the most. Getting those homeowners, their insurance needs squared away. I'll go in, pick up the auto, and then any of your investors as well, DP3s, which are your dwelling fire policies, non-owner occupied homeowners insurance policies, making sure that we're squaring away with them. But as far as referrals, you guys are my number 1 referral source because I'd say 85% of my book is homeowners. Estate planning attorneys, that's going to be on the life insurance side. A lot of my clients, after they get the homeowners policy with me, they turn around and ask me for the auto, the life. So maybe they've got a business they want me to look at. But as far as the person that sends me or the professional that sends me the life insurance is typically estate planning attorneys when they're talking about wills, trusts, court order life insurances, things of that nature. Auto dealerships and business owners. Like I said, I'm more of a personal lines guy. I'll do the commercial if it's, a big ticket item. If not, I usually just refer it to somebody in my office. We are very competitive in that space, but quite honestly, that's not my game and it's not my niche. So I don't ever try to pretend to know something that I don't know. So, but pointing those people in the right direction, those that come to me, is definitely something that I can square away. Now, as far as carriers, like I said, we've got 40, 50 of them. This was just to highlight a couple of different ones and putting them into your preferred, standard, and non-preferred categories. Now, insurance is super scrutinized. So typically when you go up and look, an insurance company's review, more than likely every company is going to have more negative reviews than they are positive. These companies here at the top are going to have more positive reviews than they are negative. And I always tell people, well, how do you judge an insurance company? Like, how do you judge the quality? My opinion, my professional opinion would be to look at what the insurance rating agencies rate them at. So Standard & Poor's, AM's Best come around every single year, and they rate these companies based on financial strength, claims handling, customer service, and a couple of other data points, and aggregate all of that data into a rating. And they spit out A++ being the highest, a superior rated company, and then all the way down to D. We got a question here. Ron Clark. Okay, can you read that out to me? I can't really see that.
He said he's in Illinois. It's not on the East Coast. So he said this one may not apply to him 100%. So he's going to catch us on the next time.
Okay, sounds good. Thanks for joining us, brother.
Yep.
Then you got Lidditz Mutual, Penn National. Those are some of the other preferred companies we've got. And then you've got Standard, NatGen, Progressive, UNA, Universal Property and Casualty are some of your standard companies, and then non-preferred. But the point is there's being a bunch of different weapons and tools in the tool bag and the arsenal. I'll always be able to find a product for your client, and it's typically going to be more competitive than your captive carrier. How is your rate calculated? So this one can get misconstrued quite often. So it's all based off of a couple of things, one of them being your insurance score. So an insurance score works similar to a credit score. In fact, your credit score actually has an effect on what your insurance score is going to be. Your claims history, lapses in coverage, age of roof, age of client, updates to plumbing, heating, cooling, and electrical. All of those are also going to have an impact on what your rate is calculated at, especially that age of the roof. A lot of our carriers will reward clients with, newer roof ages. That's probably the biggest one, along with the insurance score. And then the age of the client on the auto side. And then any updates and general updates, heating, cooling, electrical, and plumbing, it's also going to drop your rate. Also, the new construction. I'll jump back here to this one. UNA. In parentheses, I've got here unbeatable on new construction. So UNA, they only do new construction houses. So I just did one the other day. I think it was for $450 for the entire year for the homeowner's insurance. Now they only do new construction. So over time, their rate is going to continue to increase. And then when the time comes where they've worked themselves outside of that new construction window, it's going to jump by $2,000, $3,000 a year. And that'll be my tell to say, okay, client, remember 5 years ago when we spoke, you had a new construction house, it's time to reposition you. So then I leverage my other carriers. We just switch them from UNA to another one of these carriers that have the competitive rate at that time. But nonetheless, unbeatable. And the new construction houses, I mean, they're super cheap as far as insurance. Whether increased claims for any given company requiring them to purchase reinsurance, cover mass losses. So California fires, what happened out in Asheville here in North Carolina last year. Was it 2 years?
About 2 years now.
Yeah, 2 years. So unfortunately, those also contribute to what your rate is going to be over here. Those California fires, what they tell us is they didn't have enough money to pay out these claims. Do I believe that? I'm not sure, but nonetheless, they have to go and purchase what they call reinsurance, and it's pretty much a trickle-down effect. So when an insurance company has to go purchase reinsurance from a reinsurer, their deductibles go up, their rates go up, and then naturally they trickle down to us as the homeowner and client.
Is that what's happening out in the Florida area with the hurricanes, or is that since it's so consistent, is that a whole different situation?
Yeah, so insurance down Florida is, especially homeowners insurance, is a completely different ball game. In fact, you've got to get licensed by the county down there to sell insurance, and a lot of companies are actually pulling out of Florida and just not even offering it. But yes, those companies that like Universal Property and Casualty, they're out of Florida. And unfortunately, with the losses that they have, they do affect the rates that we have here because they've got to go and purchase reinsurance when there is mass catastrophe, major catastrophe. And then claims made in a particular zip code, and that's on the auto side. So you can have an auto insurance policy in one zip code of an area that you're in, and it can be, let's say, $200 a month. You can move right up the road to a different zip code, and it can either be more or less depending on what the losses are in that particular zip code. So for my brother example, he had USAA and they went up on him by about $20 a month. I told him exactly what it was. He didn't believe me. So he called USAA and they told him that, hey, in this particular zip code that you're in, we have seen an increased rate of losses and accidents and things of that nature. So they went up on them.
Yeah.
All right, here's a pretty good one. This is replacement cost versus actual cash value. This one is super important here. So the easiest way to explain this is a TV that you purchased for $800 in 2015 will be replaced at $800 if a loss occurs in 2026 at replacement cost. So even though that TV that you bought in 2015 is no longer worth that $800 that you spent, if you've got replacement cost on your policy, depreciation is not factored in. So they will give you that $800 for that TV. It does not take an age or condition of items consideration prior to loss. So apply that same concept to a roof year. If you bought a house and you've got replacement cost on your roof that is 15 years old, they are going to give you the value of that roof as if it were, brand new as when you put it on there originally, right?
Right.
ACV, actual cash value depreciation, is factored in. So they are going to take that depreciation and let's say that TV we were talking about, instead of $800, they may give you $400 or $500 for it. So it's always better to go replacement cost. It is a little bit more expensive. I'd say 85 to 90% of the policies are all replacement cost. Typically, you'll see this with investors going ACV if they know that they can just self-insure and would rather have that premium a little lower. It's really not that big of a difference between the the replacement cost and the ACV. So we always go replacement cost, and lenders typically require it to be 100% replacement cost.
Okay. That's good info.
Then you've got your different policy forms here. You've got the one that's most predominant and is most comprehensive is going to be your HO3 or HE7. That is going to be your standard homeowners policy. It's the most comprehensive policy here in North Carolina. And right under here, you can see that special form policy or open peril. So it covers all perils except for those that are excluded. And those that are excluded are typically flood, earthquake, sinkhole, neglect, acts of terrorism, things that have a super low risk. So pretty much all encompassing, just certain things that are excluded. Now, there are other policy forms like DP2 and HO2. They specifically say, okay, well, we are not going to cover wind or hail or fire or, specific items that they're just not going to cover. So HO3, HO5 is always the way that you're going to want to go. And like I said, the lender requires these policies because they are 100% replacement costs and they are the most comprehensive. They also include personal property replacement costs, additional living expense. That's going to be like, God forbid, if the house burns down, and you need a hotel, or you're relocated until your new house is purchased or built, they're going to have some coverage on there to make sure that your living expenses are paid. Other structures coverage, that's going to be tools, tool sheds, pergolas, outhouses, anything that's not connected to the house, and then liability as well. HO4, that's going to be your standard renter's insurance policy. And then you've got HO6, that's going to be condos. Couple of condos here in Fayetteville. I got a couple of clients on HO6s. Those are typically not as expensive because they're only covering studs in. So typically you've got the condo association or townhome association with a master policy that is supplementing a lot of those coverages. Always wanting to make sure that you're checking on that. If not, then we can put you on HO3 just to make sure. But the condos are studs in, so everything within the house, personal property, all of that is covered under the HO6. This one right here is a super important slide in our area. DP3, highlighted right here in bold, is going to be the exact same comprehensive coverage as your HO3, HE7. The only difference is that these are non-owner occupied policies. Super important here. A lot of the investors, they're renting out these houses, especially in this area. They're military, so they're PCS into different countries, and they don't realize that they actually need to switch their policy to a DP3. The biggest difference between that and a standard HO3 policy is that the personal property replacement coverage on there is not nearly as much, because unless they're furnishing the house, there's real no need for it. Now, if something were to happen, let's say again, God forbid, the house burned down and the homeowner goes to put a claim in. Okay, well, if the claims adjuster and everybody on the back end there finds out that, oh, you're living in Germany now because you've PCS, it can definitely cause some issues. So making sure that property managers and investors know that if they do move and it's non-owner occupied anymore, they need to be switched to a DP3. And then right here, used for investment properties must be used if non-owner occupied. They do cover loss of rental income. That's another difference. And then cover structure of dwelling and other structures, just like a standard HO3 policy does. And then down here in the bottom, limited personal property replacement coverage, if any at all. Typically, it's about $3,000. That's going to be for your dishwasher, washer and dryers, stove, any of your appliances, really.
Right.
But that's going to be there. And then the renter would get an HO4 policy to cover their personal property.
Okay.
All right. What to look for, especially as realtors when you guys are showing these houses. Swimming pools, trampolines, aggressive dog breeds, and roofs older than 20 years old. So these right here, a lot of captive carriers will rate hike for things like swimming pools, trampolines, dog breeds, and roofs older than 20 years. And oftentimes they'll actually exclude them and say, hey, look, we're not going to take you because you have a swimming pool without a fence or a trampoline without a net next to a concrete, a slab of concrete, aggressive dog breeds, and then roofs older than 20 years old. So when you see these things in an individual's house that you're showing, that's a good time to refer me there. I've got carriers that will take all of these without the rate hikes, without the exclusions, making sure that it's all encompassing. So definitely things that you just want to look out for here. This is for my lenders, but you guys being the realtor spearheading the entire transaction, definitely something that you guys need to know as well. Oftentimes there are DTI issues with these loans, and a lot of it can be affected by the insurance. So if there are clients that do, aren't meeting that DTI threshold, the insurance can make or break it, believe it or not, even by a couple of $100 over the course of the year, which will break down to $10 a month. It can burn those deals up. So I've got carriers, in order for that final CD to be generated, they need homeowners insurance. And we've got carriers that are super competitive, making sure that we can get those folks to closing. And like I'd mentioned, I think Manny's having that issue right now. So he called me and he said, look, we got DTI issues. We're trying to get clear to close. So I'm sure that whoever they were originally thought they were getting their homeowner's quote from, it's just not making the cut, and they don't have the tools in their tool bag like I do to get them low enough to that price point.
And it happens so often, to be completely honest with you, that, we end up finding, and realistically, it's usually the lender referring them to some type of insurance company, and it's just too high. And then they finally want to bring us into the fold and say, hey, we need to figure out something to bring this down, this work. And, usually it's the fourth quarter, you know what I'm saying?
Right.
And then we're like, okay, oh hell. And then, so I definitely see it, man. It happens more times than you would expect. Even the most perfect deal, you'll end up messing with some, insurance issues at the last minute. It's
Yep. And it can keep us from getting paid here. So keep you guys from being paid. So binder same day. I've got an account manager that works 9 to 5. I try to get those same day, like I will today with Manny, make sure we're getting that to the closing table. No more than 24-hour turnaround time. I had to add that in there because I'm so busy nowadays, scouting out an assistant, and my account manager is slammed all the time too with what I've got him doing for me. But in a situation like this where Manny needs this squared away today so that he can get paid and he can put those clients in the house that they're trying to purchase, that'll get done today. Tight DTI, no problem. All right, this is one of my favorite slides because this is where I tell you how to refer me. So when to refer. Once a client goes under contract, typically mentioned an offer of purchase under the buyer due diligence process. There's one line in there that pretty much just tells the buyer, find insurance. That is a great time to say, you know what, save the hassle. You don't need to sit here and, mosey around looking for insurance. Just call my guy. Oftentimes can be seen as a lender action item. However, the realtor is the driver of the entire transaction, which you guys are the therapist, the HVAC person, you guys are the realtor, you guys are everything. So I really target realtors as the spearhead of the transaction. And, while the lender typically, that is an action item that they need to do, the realtor is just so trusted throughout the entire transaction. So I try to deepen that relationship with you guys. Allows me to handle little things in the transaction that can add up, free in time for you to do what you do best, which is sell, sell, sell. The less that you have to do, the less, the easier it makes for your client. So it's little things like insurance, they can add up, and you guys don't need to be fielding calls at 8 o'clock, having somebody asking you about, what insurance to go with, or, that should just be done right out the gate so that you can spend more time with your family and recharge and reload for the next day.
I know that's right.
Do we have a question there? What is that?
It's a note taker.
Okay. And then we've got value add, extending your network to professionals you like, know, and trust, giving you the ability to be viewed as comprehensive rather than transactional. I always have believed that those realtors that are building those deep relationships with their clients and taking a comprehensive approach rather than a transactional, I get paid and never talk to you again. Those are the ones that build that pipeline. Anybody can build a referral-based practice, but in order to build it quicker, you're going to want to build those comprehensive relationships with your clients so that they're turning around and talking about you at Christmas dinner or Thanksgiving dinner or whatever the case may be. They're going out of their way to mention you.
Exactly.
Creates one-stop shop approach for your clients and alleviates pressure for your client may endure while going through a real estate transaction. Again, one-stop shop approach. I work pretty closely with my family. I know I mentioned you guys are realtors. Countless times they tell me it is just so easy to work with mom and my brother because, mom and Ty have got everybody, that they can possibly need in their network, including insurance and, making it a real smooth process for them. Referring to a seasoned professional like myself boosts confidence and trust your clients have in you. So again, you can refer to anybody, but referring to somebody that is seasoned like myself, it's going to be a good look on you at the end of the day. And I always tell all of my, realtor referral partners two things. One, thank you for the business. I'm, honored to serve their clients. And two, in sales, we always say the client is first, the client is first, the client is first. Well, in my approach is more so the client is tied with first with my referral partners, because at the end of the day, I'm a direct representation of you and, making sure that when you send clients my way, they are going out of their way to tell you how appreciative they are, how confident they are in you, that you have sent, them to someone like myself. And it was a super smooth process for them. Super important. So over the years, again, I found agents that are more involved in their transaction rather than the competition, who are quick to pass everything off to a transaction coordinator, are likely to build referral-based practice quicker. So transaction coordinators are wonderful. They definitely free up time. There's a lot that we couldn't do without them. There's a lot that you guys couldn't do without them. But at the end of the day, it's my belief that, again, those that are building those deep relationships with their clients are going to, in turn, be more likely to get referrals top of mind for their clients at Thanksgiving dinner and at Easter dinner and whatever the case may be. They're going out of their way to say, hey, I bought a house from somebody, you should talk to them, right? Rather than just, somebody mentioning something and then it kind of just goes by the wayside. Positions you as the go-to person for all things real estate, in turn creating more opportunity for referrals. And then what separates me? Education around what my clients are purchasing when obtaining insurance products. So insurance is super transactional, and I practice what I preach. So I try to build deeper relationships than the competition that I have with my clients. So when I get somebody online, we'll use Manny's client as an example. When he calls me, we're going to schedule some time and we're going to go through that product for 15 to 20 minutes. In reality, I really don't even need to talk to that client. I just need to get the docs over to the lender and never speak to them. That's not how I roll. I believe in building those relationships with the client. So I do take that time to go through, answer any questions they have. Access to every carrier that my competitors have, plus access to ones that they don't have. That's super important. We've got access to everything, plus ones that they don't have. Same day quoting. I try my best to knock it out same day. If I'm not slammed, my account manager helps me out sometimes. And eventually when I bring on a full-time assistant, they'll be doing majority of that so that we make sure the process is continuing to be streamlined. Right now, you guys have access to my account manager. Your clients will have access to my account manager, who has access to my book. So I was on the way here. A lender messaged me and said they needed a deck page because they didn't have one on file and it was an urgent matter. So I called my account manager. He turned around and sent that right to him, even though I was not able to. Standard for customer service is extremely low. Allows me to take advantage by providing an A++ experience. Nobody likes when the insurance man comes around. I take advantage of that. Again, this business is super scrutinized, and unfortunately, there are a lot of people in this industry that aren't very honest. And because of it, I can take advantage of that by not doing any of those things and providing that A++ experience. Expansive business network across North Carolina, allowing me to be a one-stop shop. Again, practicing what I preach. On the previous slide, I had one-stop shop highlighted. I just had somebody call me right before I jumped on here, one of my clients. I wasn't able to help him, but he thought about me and said, hey, you know, I've got he's got a commercial trucking business, and he was looking for somebody that could do a tow. And I didn't have anybody in my network, but I'm going to be reaching out to somebody in my network that may have somebody in their network that can help him out. So just again, one-stop shop. I'm top of mind. He refers me a ton of business, and it's for simple things like being able to call his insurance man and ask for a recommendation on, you know, hell, even dinner sometimes. You know, I mean, he flew up to Boston. That's where my family's from, and I'm kind of familiar with the area. So he was planning a trip up there. He called me on what to do in Boston, you know, so just making sure I'm staying top of mind. 8 years in the financial service industry with knowledge in financial planning. We went over that. Risk management is going to be insurance, asset allocation, and real estate. Obviously, I'm none of those things other than a risk manager, insurance broker, insurance agent, insurance planner, whatever you want to call it. So that's where I'm most knowledgeable at. But, you know, pointing people in the right direction and having those conversations about financial planning, asset allocation, and real estate, you know, to the best degree possible without doing anything that I need to be licensed in. Putting myself in the client's shoes, which in turn leads to transparency and ability to guide them in the right direction, even if I don't become the agent of record. Now, this is another big one, and that's why half of the sentence is highlighted here. I put myself in the client's shoes. I'm the professional. I know the ins and outs of these insurance policies. If somebody does come to me with a quote from another company and I feel like it is better than what I can provide, which is not very often, I'd say maybe one or two out of every 10 times, I'll tell them, hey, you know, John Doe or, you know, person X, this is better than what I can provide. And if I was you, I would go with that quote. And believe it or not, if it's only a couple $100 difference, and sometimes even more than that, I'll get a phone call the next couple of days and say, you know what, that product that I had is much more expensive through you, or a little bit more expensive through you. But my husband and I, my wife and I, my partner and I have talked about it. We really appreciated how transparent you were. And we just feel most comfortable, you know, putting our, you know, insurance in your hands so that we've got somebody that we can, you know, work with long-term.
And actually trust. Yeah.
Right. Exactly. That trust and building that deep relationship with them. Even if I don't become the agent of record, you'd be surprised. They do turn around and tell me. And if at worst case, they wait till their renewal the following year, and then they hit me back up and say, hey, you know, you were real transparent last year. You told us to go with the State Farm quote, but we want to see what it looks like this year with you. And eventually I'll pick that business up.
Right.
Annual reviews and rate reshops. Being a broker, I've got access, like I said, to 50 plus carriers. Some carriers are going to be better this year than they are next year, and some carriers are going to be better next year than they are this year. So just making sure I'm staying out in front of my clients' books, as monitoring their rates, going up, down, staying the same, reaching out to them proactively, saying, hey, looks like payments have come over from the mortgage company. That's phenomenal. Let's go through these rates. Oh, it looks like you're breaking even. It looks like you're going up. You know, I'm not going to tell you to do, but I'm not going to tell you what to do, but I'll give you my advice, and then you kind of make the final decision.
Right.
Comprehensive planner rather than transactional. I've mentioned that a couple of times. Licensed in every insurance authority. Been doing it a long time. Even though I'm licensed in everything, like I said, I really don't do the health insurance. Everything else I do. And then down at the very bottom, another one that's in bold, that's probably the most important out there, especially nowadays, is I answer the phone. So anything that I can do to answer the phone. If somebody were to call me right now, I probably wouldn't answer it because I'm spending some time with you guys. But believe me, they will get a phone call back as soon as I walk through that front door and head in my car to my next appointment. And just answering the phone. It's so frustrating, I'm sure, for you guys as well, when you guys are trying to get a deal to closing and the home inspector's not answering, or, you know, you're waiting on something from the lender and all this other stuff. Answering the phone is super important.
Exactly, man. And most of the time, it's just simple things. It's like a simple question or something like that. It's a quick conversation, but then it takes hours or days to get somebody on the phone. So, like you said, man, nowadays it's more important than ever. Just to keep.
Right. That's right. And then just a couple of reviews I have on here. You guys are more than welcome to go look on Google. I definitely pride myself on these because these are real client testimonials. People have taken the time out of their day to appreciate me, and going to my review page. I've got a perfect 5-star rating, nothing less than a 5-star, and looking forward to keeping it that way. But at the end of the day, for me, it's somebody taking the time out of their day to go, out of the, many things that they're doing, especially when they're purchasing a house, trying to get moving efforts coordinated. They're saying, you know what, this is valuable. This is valuable to him. He provided a ton of value to me. So I am going to take 5 minutes out of my day to go do that.
Yeah,
and that should conclude that.
Man. So let me ask you, Lucas, when it comes down to, the different aspects of insurance and stuff like that, what would you say is something that agents don't pick up on, or if they just knew this, their transactions would be a lot smoother?
Let's see. Definitely the exclusions. I mean, the exclusions are pretty big. That can slow things down. If like, let's say for an aggressive dog breed, if they've got an aggressive dog breed and, they try to refer that insurance out and the client, or will not refer that insurance out. If they don't refer that insurance out, to someone like myself, and then they get along the way and they're finding out that closing's getting delayed because, a week before closing, they've got the insurance company hitting them up and saying, hey, like, you mentioned we got an aggressive dog breed. The insurance company took forever to get back with them. And now they're saying, hey, we just won't insure this. Now they've got to go find insurance elsewhere. And it just, it can delay closing. So, and
100%.
DTI issues too. I mean, that's something definitely that realtors got to know about for sure.
And so like when using you, let's say we get locked in for some insurance this year, and then we want to shop around, but we want to keep you. Are you able to shop around other carriers and we can stay with you and look at different carriers year by year to see what's best?
Yeah, that's the beauty of being a broker. I mean, I used to work at captive carriers and somebody would take my quote and go blow it out of the water, and there was nothing I could do about it because I only sold that company's insurance product. Now, absolutely, rates change all the time. Some carriers are more competitive than others, and having all of those tools that I have plus ones that my competitors don't have, it allows me to retain a lot of those clients and keep them on my books because I always have something for them, whereas my competition might not have as much as I have.
100%. Well, I appreciate it, Lucas. I really do, my man. So what we're going to end up doing is after this session right here, it usually takes about an hour or two, and then we get it uploaded to our YouTube. Guys, we're going to get it posted. Lucas, where's the best place to connect with you? Facebook, phone, text message?
Yeah, best, you can call me. I mean, my cell phone number is 910-988-0492. There ain't much to, skip the email, skip the social media, just give me a call. You can text me. I give all my clients my direct cell phone number, as crazy as it sounds. But that's just how I am, building those relationships with my clients as deep as possible. 910-988-0492. And that's a textable number or a good call number as well.
100%. And guys, like I say, every single week, we do this every single Tuesday. Okay. Tap in, make sure you join. If you have a topic that you're super passionate about or an aspect of your business you feel like you would like to share, please reach out. We can have you talk about it. We can have you get into the real nitty gritty. Once again, Lucas, man, I really do appreciate you, brother, man. Take care of that for Manny. I appreciate everything you do for the team. Right. And guys, EXPCon is coming up, all right, in a couple months. Here in September, we're going to be having a session where we're going over everything you need to know about EXP as it comes up, all right? Y'all take it easy. Y'all close the deal. Thanks, Lucas.